Hi, everybody. Welcome to your Wednesday, January 26, 2022 marketing and coaching call. My name is Lee Honish. I am the former head loss mitigator for IndyMac Bank's HELOC division and the owner and president of Home Advocates. For the last decade, I've been teaching realtors, investors, and homeowners how to deal when you miss a payment. And simply that. For realtors, it means listings and opportunities and growing your client base. For investors, it's the opportunity to get shirts at appropriate prices, right? And for homeowners, it's a good education. They're just simply not getting it. They're not getting it now. They're being taken in this first wave. I definitely see homeowners, especially the elderly, getting taken advantage of. And I really am trying to do something about it. Our goal is to help 1 million homeowners and to train 1,000 real estate agents. To that end, we have brand new stuff coming out and we have brand new events. Just go check out our website at homeadvocates.io. Today, we're going to talk about the numbers and what I think is really going to happen and what does that really all mean. I do fundamentally believe, not think, know that we have already reached our peak and we're coming down off the other side. There is no question about that. And I'm going to show you the numbers and I'm going to show you what I think the correction is, why I think that, what I actually track when I look at my daily data. So I have a routine. I keep track of the media because that influences how homeowners behave. Does that make sense? And right now, we're simply not talking about the economy all that very much. But what caught my eye today was the discussion about the Fed tapering off their zero lending thing that they started March 2020, right? When they started giving money out for free. And earlier this month, we saw that the interest rate on loans went up almost a full basis point. And if you don't know this, right now you have to have roughly a 20% down, 720 FICO to even get the 1% rate hike. So it's a very limited number of people that really fall into that category. Now, do I think that those events by themselves are going to be big enough to actually start what I call the first wave? And the first wave is market correction, right? That's what everybody's going to call it this year. Don't get it twisted. Nobody is going to say that we are crashing. We have started our arc back down to reality. The question is, where does it bottom out? When does it get considered a crash? I'm not here to scare you. I'm here to tell you what the data tells me as a banker who's worked in this field for 30 plus years. I think the weird part for everybody is when I talk to default properties, they start to believe that it automatically means short sales. It doesn't automatically mean short sales. It means somebody missed a payment. It means they have 9 options. It means teaching them those 9 options. And the very, very, very simple fact, if somebody's missed at least 6 payments, which would put them at a notice of default or a list pendants, depending on where they are in the country, 8 out of 10 of those people are going to transfer title, period. Even if they refinance it through some magical hard money source, that's a title transfer. I don't think people get this. Transferring title happens with people who miss it. 6 months worth of payment. You're basically looking at 50% of the options on the table. And to be very frank with all of you, a great deal of those have opportunities for you to make money, to help people, to build a base. And there are many agents today that are literally number one in their market. And a great deal of their money and the way they got to position was by helping people from training that I gave them. This is a very simple niche, and I'm going to show you all the numbers right now. There are 1 million properties getting filed on as we speak. And then I'll show you some of the changes we're working on for 2022 to your platinum group, the opportunity for some of you to get into that platinum group, and we'll go from there. As always, go to our website, homeadvocates.io. You can find past video of me and find out more about our company. I'm going to show you some very simple market analytical data of the 3 companies that I watch. I watch 3 companies every day, keep track of them, because it gives me the widest range of what I need to know about the market. The first is BlackRock. If you don't know what BlackRock is, it's probably one of the largest investment companies out there. We are fortunate enough to work with a couple of companies that buy properties, not quite the same size as BlackRock, but certainly the same kind of business model. And currently, they're kind of on the backside right now. They kind of had a bit of a crash fall off over the since the beginning of the year, and they're down actually a bit at this point. I think at the end of the year, they closed at what, $900 a share, and they're down to $800 a share. If I was an investor with them, I'd probably be a little pissed off. The reason I'm tracking it so closely is because there's one overwhelming theme that I'm about to show you, which is what the market's going to correct to. What we're watching right now is a market correction. That's what they're going to call it. What I care about is what's the number and what should I expect, and how does that affect median price? So if we rewind the data back to March of 2019, which would be the start of the holy grail of everything that's going on, right? What set the market sideways is this little figure right here, March of 20. I want you to keep track of March 20th, 2020. That's when we started lending money for free. The interest rate went to, literally went to nothing. That's when they did it. The market started to collapse. It didn't start immediately in 2019 when they locked us all down. It was a year after that. It was during there that we started the slide. You can actually watch this slide take place for a lot of companies, right? We were kind of coming out of it, and then we knew it would be extended, and then it just started, the wheels came off the wagon. March 2020 is the lockdown. Fed had to drop the interest rate to zero. And since they went to a zero interest rate, and since real estate values started to go through the roof, why? Because basically 500,000 people decided as of March 2020 not to sell their home anymore. It's provable data. We reached their peak 2021, October, November, December, somewhere right there. And now at the first of the year, they're starting to drop. And over the first month already, they've dropped $100 a share. So they're sliding. Wait, Zillow's sliding, but we all knew that. Where was their bottom? What a remarkable thought. Somewhere around March 2020. They're almost corrected. By the way, Zillow knew this was all happening, and that's why they started selling off their properties. They knew that everything was correcting. If you look carefully, they waited a long time to liquidate a lot of their property. They knew that this was coming. They knew that they were going to correct back to this figure. We're all going back to this March 20 figure. We are, because if the Fed raises the rate, we're in the middle of inflation and everything else. I think they are projecting that they are going all the way back into their 30 range. And that's what caused them to sell off all their properties and go home and take all their toys. My fear with BlackRock is that once they have a substantial period of time of properties depreciating in value, like Zillow did over the course of last year, because they watched this all play out, I think BlackRock's going to sell off a chunk of their property too, in tremendous numbers, right? Because they're going to want to keep it cash solvent. Let's take a look at Chase, the other people I take a look at. March 2020, here we are. There's their low number, $83 a share. Since then, in this zero interest rate, they kind of floundered for a little bit. And what happened? What caused this big first sort of wave, and what happened for them? Well, everybody who missed a payment, we just reassigned them. We took them off the books. Therefore, they were a healthy company that kept climbing, but something remarkable happened. As of December, their values have started to drop. They also started filing foreclosures. The Fed is also talking about tapering the zero interest rate. There's an overwhelming theme here, which is, where is everybody heading? Everybody's kind of on a downward spiral, if you don't believe me. And that's the problem. Let's take a look. March 2020, be right about here. That's about where we started to slide. So up until about that point, right, the pandemic starts to set in. We were kind of averaging around 1 million homeowners. Generally speaking, historically, we average about 1.4 million. But right about here is kind of our point where everybody decided, at least 500,000 people decided to stop selling. So I will say this to everybody. Where is this going? It's on the way up all of a sudden, right? The number of inventory, the number for inventory is increasing, not decreasing. Okay, so the supply and demand myth that keeps perpetuating is a joke. I suspect that throughout the year, we're going to go all the way back to about 1 million, 1.5 million homes. Here's my question. Oh, pricing people, will that increase or decrease the value of properties? And if you picked the answer why that would lower the value because supply and demand would no longer be an issue, you'd be correct. In fact, we've got this data backed up, not just by using an Altos research form or Realty Tracker or any of the other million data points. People are seeing increased number of listings coming back onto the market. It's not significant because, of course, this is the beginning of the correction period. It's not going to be significant until we get somewhere into summer. The question is, will traditional people want to sell their house? And I would argue that they will, because as prices come down, the fear of losing out on equity will increase, which will increase the number of properties that sell. I would say by the end of 2022, you've got at least 1 million, somewhere in the range of 1 million to 1.2 million properties. I'm going to eat up a lot of equity when there's a whole lot more homes on the market. Now let's go back to people who can buy. Got to have a 720 FICO score, 20% down to get your hands on institutional money right now. And that interest rate's 1% higher. You think people are going to pay those prices? Their prices are going to come down. It's just the bottom line on those first slides. Well, what does NAR say? They've always got a rosy picture. How are pending sales right now, Lee? You're just being a doomsdayer. Well, NAR saying pending sales are down 2.2%, and existing sales are down 4.6% less existing home sales month over month. We're declining, and there's no way to stop this. People are going to buy less. So where does that leave us, Lee? Well, if you type in median home price US 2022, it will tell you exactly what is going to happen, right? Currently, the median price nationally is $358,000. Yes, some markets it's higher and some markets it's less, blah, blah, blah. But in December 2020, we've gained 16% on properties since 2020 on average, right? So that's the national average. So what does that mean? I think you can take a look at the prices in your market. And if you got $1 million home, say here in San Diego, I think it's going to lose $100,000 worth of equity. Go look at San Francisco right now. They're doing price drops of like $50,000 to $100,000. They're already seeing about a 10% price adjustment constantly. I guarantee they're going to start projecting a depreciation in value. And the only reason nobody says it out loud is because it will scare the media. The only reason you have a real estate market that is as robust as it is value-wise is because investors are buying it up. They're turning them into Verbos and Airbnb. You have to look at the national picture to understand what affects your individual market's mentality and mindset. You're dealing with an economy that has to correct 16%. It has to correct. Look carefully. I guarantee the peak for BlackRock of almost $1,000 a share is going to wind up back in this range of about $300 or $400 a share. Same can be said for Chase. Their general numbers are right around here. These are the real numbers through here. Everything you see with the spike as of March 2020 is fake BS, pump money into the economy. The reason the economy stayed up is we gave money to people. And for every dollar we gave to people, that was $4 back into the economy. And that's why it looks so powerful as it does. And investors took the opportunity with the unbelievably low interest rates to gobble up property at a horrendous rate. And 500,000 people stopped selling their home because there was a pandemic. But once everybody figures out, thanks to the national media, that they're going to be losing 10% of their value, which is a tremendous amount of money in some cases, things are going to change dramatically and rather quickly. And that's all going to happen over the course of the next year. For you as a realtor or an investor watching this, this is your opportunity to take advantage of those things. If this is your first time on the call or you're watching a video, you can just Google home advocates. One of the greatest feature of home advocates, in my opinion, is that you get to be on page 1 of Zillow. Yeah, right. Any of these people, Gilbert, Evans, anybody. I'm giving you guys page 1 websites, just like that. Just like that. So the platinum group itself will be $5,000. And the reason for that is simple. You get leads, you get an automated call center, you get all the latest and best toys that I create. You will get what I call the red funnel, which is coming online. If you don't know anything about my real estate dealings program, I gave a bunch of people the opportunity to get involved and be a part of the test group at $100 a week. We ran the numbers yesterday for everybody. I am now consistently able to take a group of people and get hundreds and hundreds of views of you and your message and average out to be about anywhere to 20 to 50 direct clicks and hits and expose you to thousands of people every single week. And that's the secret. So that's the new price for the platinum group. For the general population of real estate agents that'll come online, and or even you guys, we're going to have a straight home advocates marketing system. There will only be 3 parts to it: a direct marketing system, a digital marketing system, and a referral based marketing system. This program by itself, just to get you back onto page 1 of, you will have to pay $14.97 and pay $147 per month for the right to be on page 1 and put your name next to all these wonderful people who helped me build this company from the ground up. So if you're a former short sale genius, AMS monster, but if you've ever worked with me before, you can upgrade for $9.97 and be in the platinum group. If you have never seen me before and you are somehow magically on this call and you've just been coming on my calls waiting to take action, there's your number. It's $19.97. You can get involved right now. We guarantee face-to-face or your money back. I have never had to refund for not getting somebody face-to-face. The red program, which is my give and take with Derek, I am still looking for people. The numbers are astounding of how well the digital marketing platform is. Right. So we want real organic traffic. We don't want people clicking crap just to click crap in viral videos, right? So let's look at what you really invest by creating a 30-second video with a YouTube recorder. I showed you guys all the steps. There's a previous video that goes into greater detail about this. I just want to show you the impact of creating content. I reached 48,000 people. I had 1,000 people watch the video. They clicked to look at this. And I'm actually going to show you the back end of this. So the page itself had 278 unique visitors, 413 overall, but 207. That means that people went back a couple of times and looked at the information. And if you're saying, but Lee, how many people actually called and left their info? It was the first week of doing it. I have said this repeatedly, and this is why most people don't like online digital marketing. You're not going to get people week 1. You're not going to get them week 2, 3, 4, 5, 6. You have to do this week after week after week after week after week after week. You got to do 52 weeks to really build this up, because look carefully at that screen. They're going back and looking at it again. So are they close to missing a payment? You don't know. I don't know. We don't know. It's digital marketing. But clearly there were people interested in that information, right? If you click on Get Help Now, it just brings a pop-up, but it's also got the 800 number, and now it's branded, which, more importantly, if they go to Google or they forget anything, right? I watched the video. I think they were called Home Advocates. And I don't know her name. I think it was Terrell Miller. I'm sure you get that one. And if you scroll down, you're right. They can look it up from the people on the video, as well as all of you that are a part of the program. They can also call the 800 number and leave a message, and we will forward that message to you. You can always verify it with your back end numbers, 100%, right? You can always back end your numbers to see if everything's coming through. And you are a part of a test group. I am guaranteeing that you will get 1 listing. You are also the referral basis of anything that's coming in through the other funnels that I'm running. So it's $100 a week, one-time fee. I guarantee I get you a listing, or I give you your money back. It's just that simple. So if you don't get on red and then you see that it jumps, yeah, it's probably going to be 500 a week. You tell me if it works. I mean, I'm kind of frustrated with you guys when I create these programs, because it's kind of comical to me, because they work exceptionally well.